These are the 6 most important investment advice that Warren Buffett has shared with investors in his famous shareholder letters. Let's apply these lessons to begin the new year on a positive note. The market indices have reached all-time highs, and the new year has begun on a bright note. Most investors are eager to learn about investment opportunities from friends and family. Why not make sense of the market's volatility from the expert whom Benjamin Graham dubbed Mr. Market? Mastering the ins and outs of the trade is not necessary for most people to succeed, but understanding the fundamentals is absolutely necessary to make money, asserts Warren Buffett. He once said, "It's amazing how hard people make what is a simple game. But of course, if they told everybody what a simple game it was, 90% of the income of the people that were speaking would disappear." Let's dive into the important investing advice that the Oracle of Omaha has provided to his investors. Focus on the forest, forget the trees, focus on the big picture. In a 2018 letter to his shareholders, he asked investors to focus on the forest of, in reference to a large corporate group, instead of the details of numerous and varied businesses the group may be running. If everything is going well in the group, you don't need to assess the future potential of your investment by looking at each tree separately. Focus on earnings, not adjusted earnings. He observed that some businesses use adjusted EBITDA rather than EBITDA in their presentations in order to omit a number of expenses. For instance, managers may argue that the stock-based compensation offered by their company is not an expense. On this topic, he quotes Abraham Lincoln and says, "If you call a dog's tail a leg, how many legs does it have? 4, because calling a tail does not make it 1. Be cash rich to be safe and secure." He advised on setting aside money to deal with any future emergencies. He said that a significant number of treasury bills and other cash equivalents are held by his company, Berkshire. We consider a portion of that stash to be untouchable, having pledged to always hold at least $20 billion in cash equivalents to guard against external calamities, he advised. Retained earnings are important. In his 2019 letter to shareholders, Buffett cited Edgar Lawrence Smith's book, Common Stocks as Long-Term Investments, published in 1924. He said that well-run industrial companies do not distribute to the shareholders the whole of their earned profits. They keep a portion of their revenues and reinvest them in the company during prosperous years. Compound interest is one factor that works in favor of wise industrial investments. Buffett stated that prior to Smith's book, investors did not seem to comprehend why retained earnings were unappreciated. Disciplined risk assessment. In the 2019 letter, he also discussed the disciplined risk assessment that his company's insurance managers adhere to on a regular basis. He wrote, "Risk evaluation, it's a religion, Old Testament style, at Berkshire." Don't invest just for the sake of investing. He previously stated that his company has $144 billion in cash and cash equivalents since there were no worthwhile ventures to invest in the market. Therefore, unless they have a chance, people with money to invest shouldn't merely do it for fun. Do let us know what you think of these priceless tips from Warren Buffett. Like, share, and subscribe if you like this video, and press the bell icon to never miss an update.